Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Zoetis. Cattle producers are business people, and like most business owners, they appreciate a good forecast, whether that's for upcoming policy decisions, weather patterns, or market trends. It becomes especially true as the calendar transitions to a new year. CattleFax analysts are always making price forecasts within the grain, energy, livestock, and protein markets. Our predictions may range from a daily expectation to a 20-year projection, but any price forecast is only as good as its assumptions. That generally means developing well-defined expectations for supply and demand. Supplies are generally the easiest of the two variables to predict. In the case of beef and cattle production, it means forecasting inventories, slaughter, carcass weight, and trade. Demand is usually the toughest variable to forecast because it has to answer two questions. How much product does the buyer want, and how much are they willing to pay for that quantity? CattleFax looks at a variety of consumer-related factors to estimate retail demand. Then the analysts work together to evaluate leverage throughout the production segment to dictate how much those consumer dollars are shared across the industry. In 2014, CattleFax expects retail beef demand to be steady to 1% higher than the previous year. That demand expectation is based on assumptions that the U.S. economy continues to improve and that consumers continue to feel better about their financial future. Consumer personal incomes should improve in 2014 compared to a mostly steady income pattern a year ago. More importantly, consumers have done a better job of reducing monthly payments and have increased their savings rate since the mid-2000s. This should allow consumers to pay new, record-high retail beef prices at grocery stores and be more comfortable in ordering high-quality steaks at restaurants in 2014. In the end, this provides more dollars to fuel a beef cow herd expansion without negatively affecting demand. The fed cattle market was not fully established at recording time, but holds a softer undertone. Feeder cattle values were mostly steady for the week, while calf prices ranged from steady to as much as $5 per hundredweight lower. The steepest declines came in the lightweight calf market. Despite profitable cattle coming out of feed yards, higher break-even prices on purchased cattle is limiting demand, especially in the southern plains. Corn prices were modestly higher this week on stronger USDA-reported export sales. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.